Hey there! Welcome back to Legend Finance. Today's topic is bound to illuminate your investment journey, no matter where you're starting from. Yes, we're exploring candlestick charting. Whether this is your first interaction with this concept or you've come across it before but felt it was a bit complex, you're in the right place. We believe that financial tools like candlestick charting shouldn't be reserved for a select few but should be accessible and understandable for all. So regardless of your background, your level of experience, or the type of investments you're interested in, be it stocks, forex, crypto, or commodities, we're here to make it clear and relatable for you. So are you ready to unlock a new level of financial understanding? Let's journey together towards a more empowered and inclusive investment community. Here at Legend Finance, our mission is to make financial knowledge approachable for everyone because wealth growth should be an opportunity for all. If you're new to our channel, make sure to hit that like and subscribe button and ring the notification bell so you're always in the loop with our empowering financial lessons. Finance can be fun and inclusive, and we're about to prove it. Engulfing Candlestick Pattern. Ever heard of the engulfing candlestick pattern? It's a fascinating tool in trading that can hint at when a trend might be about to change. New to this term, no worries. An engulfing candlestick, as the name suggests, is a candle that's the opposite color of the previous one and completely engulfs it. In a bullish scenario, it starts trading at or below where the last one closed and finishes above where the previous candle opened. It's like it's trying to outperform the previous candle by being bigger at both ends. Let's dive into an example. Suppose we've noticed a robust support line where the price has bounced back several times. This tells us that the market respects this line. When the price hits that support again, we can anticipate a bounce. But we're not gamblers, right? We need more assurance. And that's when our new friend, the bullish engulfing candle, enters. This candle swallows up the prior red one, and it's right on the support line. This might be a strong signal that the price might start to climb, and we can consider entering the trade. But let's remember, we're all learning here. A bullish or bearish engulfing candle isn't a guaranteed ticket to a price flip. It's about using these patterns as helpful guides, not exact predictions. We should always pair them with other tools, like support and resistance lines, indicators, and a variety of strategies. A bullish engulfing candle doesn't mean a certain price hike, but it can suggest the price might head upward. Now let's turn this around and consider a bearish example. Imagine a solid resistance line that the price has respected multiple times. As the price starts to climb and loses momentum, a bearish engulfing candle appears, totally engulfing the previous green candle. It's rejected at the resistance, and the bearish engulfing candle suggests it might be a good time to short, and then the price might just drop. Momentum Candlestick Pattern. Another fascinating pattern is the momentum candle. It's straightforward to spot, being 2 to 3 times bigger than the previous candles. The size of the momentum candle suggests a strong drive in price, and more often than not, the price continues in the same direction after it appears. This makes it an excellent entry point for traders. The momentum candlestick pattern is particularly effective in choppy markets, where the price moves sideways. When you see a large momentum candlestick in a sideways market that's significantly larger than the previous candles, there's a good chance that the price will continue moving in that direction. This happens because in a sideways market, many traders who have short positions are reluctant to exit their trades. They set their stop losses just above the support line. When a sudden price movement triggers these stop losses, it can result in further price movement in the same direction. Furthermore, when the price breaks out of a choppy market, it often signals the start of a trend. This logic applies to short positions too. In a sideways market, a large red candle that's 2 to 3 times bigger than the previous candles can be a strong signal to enter a short position, anticipating that the price may continue to fall. Multiple Candlestick Pattern. Let's chat about the multiple candlestick pattern. It's like a faithful friend that often shows up on our charts. It's quite simple too. When you see 3 or more candles with wicks pointing one way, take note. The more candles, the more interesting it gets. We like teaming this pattern with support and resistance lines. Imagine you're viewing a chart. Can you see a sturdy support line where the price has ping-ponged multiple times? Now visualize several candles with wicks that dip down, all stationed at the support. Picture a tug of war. Sellers are trying to shatter the support, but the buyers are resilient, pushing back each time. This constant back and forth emphasizes the solidity of the support line and might suggest an upcoming bounce in price. Remember, the larger the group of candles at this tug of war, the stronger the hint could be. Consider a scenario with shorts. The price hits a resistance line with several candles showing upward wicks. This suggests the price is reluctant to climb further, giving a good entry point for a short position. We enter, anticipating a price reversal, and voila, the price drops. Dodic candlestick pattern. Next up, let's imagine the Dodic candle. Picture a candlestick with a skinny body and wicks at both ends. This one's pretty crucial because it's like a neon sign signaling a potential price reversal. The Dodic candle embodies market uncertainty. It's like the market is at a crossroads, unsure of which path to take, and there's resistance. More often than not, when uncertainty and resistance arise, the price might flip and head in the other direction. Let's walk through a scenario. Imagine the price is diving hard, and then out of nowhere, a green Dodic candle pops up. This could suggest that the sellers are losing steam and buyers are stepping in. It could be an opportune moment to make a move. With Dodic candles, I typically wait for 2 or more same-color candles to confirm a possible price reversal. For instance, after spotting a green doji, I'd hold on and wait for 2 more green candles marching upwards, indicating a likely uptrend. That's my cue to join the trade, and just like that, the price rises. The Dodic candle comes in a few variations. The regular one is what we just covered. Then there's the long-legged doji with its elongated wicks. The dragonfly doji flaunts a tiny body and a big bottom wick. The greystone doji has a small body with a large upper wick. All of these variants are storytellers of the same plot, a potential price reversal. Hammer candlestick pattern. Imagine that we're now exploring the hammer candlestick. Picture a candle with a good-sized body and a lengthy wick. The story it narrates is of a dramatic turnaround. Sellers initially drive the price down, but then the buyers rally, absorbing the selling pressure and hoisting the price back up. It's like a thrilling comeback story, and usually it's a very bullish sign. This could suggest that the market might just keep charging in that direction. Shooting star candlestick pattern. Let's talk about the shooting star candlestick, a close relative of the hammer. Picture the hammer, but with a little twist. It has a small wick on the opposite side. The approach to this is much like dealing with a hammer. If you spot a shooting star candle in your imaginary chart, it might be a good clue that the price could be about to make a U-turn. Tweezer candlestick pattern. Now let's dive into a fascinating pattern called the tweezer. Picture this: a red candlestick first appears and then a green one follows. Interestingly, both of them have wicks on the bottom that are remarkably similar. When you see this dynamic duo, it could be a strong hint that the chart might start climbing. Think of a situation where the price is just about to nudge a support line. You see a red candle appear with a wick on the bottom, sitting right at the support. Then comes a green candle, also with a wick pointing downward. It's like the chart is tipping its hat to the support and is starting to gather momentum to ascend. That could be a prime time to buy in, and guess what typically happens next? The price takes a hike. It's worth noting that the story flips to a bearish signal. You should look for a green candlestick, then a red one, both of which should have wicks visible at the top. Imagine that exact pattern playing out, and then, as if right on cue, the price takes a nosedive. There's one more candlestick pattern to share with you. It's the grand finale of our candlestick pattern exploration. Maru Boza candlestick pattern. Now let's round out our candlestick chat with the Maru. It's quite a sight to see. The bullish Maru looks like a big green rectangle, a hefty green candle without any wicks. The intriguing aspect of this pattern is that it's often a good sign that the price might continue its journey in the direction it's already heading. You'll typically spot this candle strutting its stuff in the middle of a trend, reinforcing that the trend is likely to keep moving upward. Imagine you've just witnessed a price reversal, with the price starting to climb. Suddenly, you see a bullish Maru candle taking center stage. Notice how it lacks any upper or lower wicks? This means the lowest price reached during the candle's period matches its opening price, and the highest price matches its closing price. It's as if the buyers have staged a total takeover. You can then quite confidently predict that the price will continue its ascent, and more often than not it does. The bearish Maru is the mirror image of its bullish counterpart, a sizable red candle with no wicks. Picture a situation where the price is just reversed. You see a bearish Maru candle making its presence felt, signaling that the sellers now rule the roost and the price is likely to keep heading downwards. Thank you so much for watching Legend Finance, our future financial aficionados. We've reached the end of today's crash course on candlestick charts. Let's remember, every investment titan started from scratch. Persistence, curiosity, and continuous learning are your keys to success. We genuinely appreciate your support. If you found this video helpful, do us a solid, illuminate that like button, and subscribe to our channel for more financial insights. Feel free to share the wisdom with your fellow finance adventurers. We value your input, so if you have any intriguing questions or particular topics you'd like us to dissect in our upcoming videos, please leave a comment below. Our mission is to demystify the complex world of investing and make it accessible for everyone. Again, thank you for choosing to spend your time with Legend Finance. Don't forget to aim high, and as always, stay legendary.